Hello everybody, welcome to this week's edition of Northwest Quadrant Wealth Management e-News. Thanks for joining us. So we finally have some certainty around the results of the election, and actually Josh and I will be the first to admit that we were quite surprised that even the night of the election we sort of knew what the results were going to be, and so there wasn't a lot of volatility around the post-election results, which is certainly a good thing. So markets like certainty, and we now certainly have certainty around the election, and for the most part, both houses of Congress. So markets can now trade on knowing who is going to be in the White House and in Congress. And there's certainly different parts of the market that are doing well, while others aren't doing quite as well, based on what market participants think the new administration is going to do. Oftentimes, markets get those badly wrong, so we would never attempt to do those sort of trades in your account. But the other thing is, when you look at the market, obviously we've had a couple of years now of unbelievably good returns for stocks, and now the stock market in general, as measured by the S&P, is in the 98th percentile in terms of being expensive. And so stocks are certainly not cheap. Almost all of the returns we've seen in the stock market have come from multiple expansion. Earnings are still growing, but they're not growing nearly as much as stock prices are going up. So what that means is we are absolutely expecting some volatility. We don't think high double-digit returns can continue out into the future indefinitely. We certainly need to have stocks come down or come back a little bit, and that can be solved with some short-term volatility, which we are certain to expect. Now, doesn't mean we think you should be doing anything crazy with your money, but Josh can talk about probably some of the catalysts in the next few months that could cause stocks to sell off.
Well, now that the election's over, the market can go back to focusing on the only paradigm that's ever really mattered for really going on the last 15 plus years, which is the Federal Reserve's decision to either cut or increase interest rates. Of course, we have been arguing for months and months, even over that growth scare during the summer, that inflation risks to us seem balanced to the upside. The latest data seems to be confirming that assertion. You've got relatively hot CPI, producer prices came in at 3%, trailing 1 year. Real wages are higher, retail sales are higher. All things that, leading to higher earnings and ultimately better valuations, to Tyler's point, which of course we want to see mean potentially higher interest rates. Not necessarily from the Fed. The Fed seems willing to let inflation run relatively hot and still cut rates despite that resurgence in consumer and producer prices and actual higher wage growth, which just tells you again that the Fed is potentially primarily only concerned with the fiscal situation of the United States and not necessarily with quelling inflation, which just means over the long term that bondholders, of course, will be devalued. But that's what we've been focused on. We're going to also, we think, return to that dynamic where good news on the economic data front may portend actual bad news for markets, and that good news on the economic data front will lead to higher rates and thereby less of an expectation of more imminent rate cuts, which is the heroin that markets have ultimately succumbed to being addicted to.
Yeah, so it's that weird dynamic where when we get good economic data, the stock market interprets that as bad because that market thinks that the Fed's going to stop cutting interest rates and leave rates where they are. And remember, interest rates drive valuations across every market: housing market, stock market, bond market. And so the market and market participants are ultra addicted to low interest rates, but we don't think we're going back to those days of zero interest rates. All right, if you have questions about your situation or your account, you can call the office, 800-743-0988, or you can email either one of us, Josh or Tyler, at northwestquadrantwealth.com. We'll see you back here in a couple weeks.